Hi, this is Toni Turner, and welcome to the market now as of about noon Eastern on Friday, December 14th. Well, U.S. consumer spending gathered momentum in November as households bought furniture, electronics, and a range of other goods, which could further allay fears of a significant slowdown in the American economy. The upbeat data from the Commerce Department today bolstered expectations that the Federal Reserve will raise interest rates for a fourth time this year at next week's meeting on Wednesday. It also stood in stark contrast to reports from China showing a dramatic fall-off in retail sales in the world's second largest economy, and from Europe, where a key measure of business activity expanded at its slowest rate in 4 years. And on that cheerful note, let's go on and look at three charts that could give us some insight into the week to come. Well, so far today, the S&P 500 continues to fall. We're sitting in nail-biting territory right here so far today. As we end the week, that's continuing the volatile moves it has traveled through since the SPY hit its all-time closing high that was established on September 20th. At $293.58. That's about $29.35 on the S&P 500 itself. Now, since we made that dramatic fall right after those highs, came down real low here, down to a low of about 258 and change on October 29th, and then rallied back up again. Now the SPY has been trading in a range. The highs up here, trading this in October, November, and part of December, the highs are right about at 281. The lows here are right about at 262, 263. Now again, when I captured this chart today, the SPY was lower on the day, trading at 261.68 or about 26.16 on the S&P 500 itself. Now, we're seeing the death cross continue. The death cross is the green line, the 50-day moving average, still crossing down below the 200-day moving average. The 200-day is coming in here at about $275.69 so far. The green line, the 50-day moving average, is continuing lower. Now, the death cross sounds probably scarier than it is. While it doesn't absolutely mean there's more downside to come, it certainly does indicate weakness in the market at the current time. Now, to rescue it from its current doldrums, the SPY, the S&P 500, needs to continue somehow or other here to hold support at 260 or 2600 on the S&P 500 itself. And the SPY and buyers, need to jump in here and take the SPY, the S&P 500, back above this 200-day line, which again is coming in here at 275 and change at the current time. Still in all, since the SPY is sitting at the low edge of its range, and with the volatility continuing, I'm going to keep very cautious heading into this coming week, especially with the FOMC interest rate announcement coming in this Wednesday. Now, if I do see a good opportunity, and there are a few out there, I will follow my usual defensive strategy of entering only small positions and entering with very firm stops. Now, we'll have to stay tuned to see if the SPY can get a little jollier maybe in the coming week, and perhaps even in the next 2 weeks experience a Santa rally as we head deep into the holiday season. Our next chart today, as we usually look at, is a chart of the Invesco QQQ, symbol QQQ. As you all know, the QQQ represents the NASDAQ 100 index. That is the top non-financial stocks in the NASDAQ stock market and a very important index in the market. Now, since the QQQ made an all-time closing high on August 29th, at 186.74, it has made a high since then. We see a double top here, and then, as you know, it began its fall down to October lows down into this zone at about 160. Now we can use some good news here. As we can see, the QQQs came down, made this low, rallied back up, came back down, made another low here in November at 157. Now that's a low we don't want it to go below. Then it rallied back up, but the good news is it made a higher low. So the QQQ made a higher low this past Tuesday at $159.41. Again, that's above the November low here of 157.13. Now we have to see, it's coming down again today. Now we have to see if the Qs can hold support at 159, that's right here, and start calming down and inviting new buyers in. Now today when I captured this chart, the QQQ was trading at $162.15. Again, it has started lower so far again today. A lot of times on Friday afternoon, markets will rally as short sellers will cover their positions. We'll have to see if that happens today. Worst case scenario though here, we do want the Qs to hold 157. And if price can wander around here in the coming week and then perhaps start higher and hold 157, we could still see a rally this month. So please stay mentally nimble. Please don't trade what you think should happen. Trade just what you see. And if you stay nimble, that means you can take advantage of new opportunities when they appear. And when this market starts gathering upside again, we will see some fantastic opportunities. Okay, our final chart today is one we haven't perhaps looked at in a long time, if ever. This is the Global X Silver Miners ETF. The symbol is SIL. It's an international ETF. Some of the top components are Korea Zinc, Polymetal International, Wheaton Precious Metals, Pan American Silver, and Tahoe Resources. Now we can consider this a bottom fishing trade. It was trading, SIL was trading at about $32 in April. Since then it has fallen in a very steep downtrend, touching lows in November at $22.35, so it's down by 30%. Since these November lows, SIL made a slightly higher low right here toward the end of November, and then it started back up, moving above its 20-day moving average, the red line, the 50-day moving average, the green line. And when I captured this chart today, the SIL was trading at $24.57. Now, as you can see here, there's some periodic high volume days coming in. This is not a day trading stock. It doesn't trade with high enough volatility, or a high enough volume, I should say. But it is a defensive move. Please remember that silver and silver miners are defensive plays, and I'm thinking this may be a good time to get a little bit defensive. So if SIL continues to trade above its 50-day moving average, and as I captured this chart, it was trading at $24.57 with the 50-day moving average coming in at $23.92. And if SIL remains strong in the coming week, I will add shares to my portfolio with an initial stop as a close below 23.70. That would be my first stop, 23.70. After that, if it can continue to trend higher, closer up to 25.50 and so forth, I will move my stop into a close below the 50-day moving average. Again, that's right now coming in at 23.92. And if it continues higher, then I will trail my stop under. So you may want to keep an eye on the SIL in the coming week and see if it's something that appeals to you. And now on for the coming week's economic reports. But first, I wanted to take just a moment to tell you about our holiday sale on my online trading product, Trade the Trend to Profits. In this 2-hour recorded webinar, I'll show you how to take 20, 30, 50% or more out of trend trades. This is the easiest and most straightforward way to buy stocks and ETFs at a low price and then sell them for a substantial profit. My strategy for these trades is extremely simple and easy to apply, and the profits can be fantastic. Now check Trade the Trend for Profits out now, because we are offering it for the next few days only at a holiday discount of 20. And it won't go on sale again for quite some time. So please don't miss out. Check out this sale by clicking on the orange button below. Now for the coming week's economic reports. On Monday, we'll have the Empire Manufacturing Index. Tuesday, we'll have housing starts and building permits. Wednesday, we'll have existing home sales, crude inventory, and the all-important FOMC rate decision at 2 p.m. On Thursday, we'll have our usual jobless claims, Philadelphia Fed, and natural gas inventories. And on Friday, we will see durable orders, the GDP, and PCE prices. And remember, this is your chance to learn how to make sweet trend trades with clarity and confidence, and you'll earn more trading profits from now on. So don't miss out on our holiday sale for Trade the Trend to Profits. Just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is the Market Now.